So today, once again, a lot of stocks, especially the tech stocks, were getting hit super hard, and in this video I'm just going to talk about that a little bit and get into some of the stocks that were down, some of the stocks down in my portfolio, and what I think about the whole thing, and I guess a little bit about why it might be happening as well. But before I get into the video, if you haven't checked out my channel before, I talk about investing in the stock market and really anything that has to do with money. So if you're interested in stuff like that, definitely head over to my channel and consider subscribing. But other than that, getting into the video, like I said, tech stocks, not the entire stock market necessarily as bad as it's been the past couple of days, but definitely the tech sector was getting hit very hard today. Past few videos have really just been talking about how the stock market's been performing pretty badly, just because I think it's been pretty significant the past couple of days. Like in the past, since I've had this channel, I guess the stock market's pretty much gone up except for the past couple of months, and especially the past few weeks or so. And today specifically, a lot of tech stocks were getting hit pretty hard. I know a lot of people out there on my channel like tech stocks, like myself. I wouldn't say my portfolio is necessarily tech heavy, but definitely like tech stocks, and I think they're a lot more interesting, and I know probably more about the companies than probably some other stocks in my portfolio specifically. But anyway, some in my portfolio, they were getting hit pretty hard. One of the biggest ones was Netflix, which is kind of a tech stock, kind of not one. Technically, they're providing a service, so they're like consumer services, but still pretty tech heavily based. Netflix down almost 5%. Netflix has been getting killed over the past couple of weeks or so, down about almost 10% on the week. Obviously, on the year, they're still up almost 100%. And past 5 years, up like 1,000%. So they haven't been, getting hit hard in the long term, but they're definitely at a pretty better buying point than they were before. Not a whole lot today specifically in my portfolio got hit super hard. Intel got hit a little bit hard. Apple got hit a little bit, but that's really it in my portfolio. But some of the ones I don't own, they were getting hit pretty hard. I know Roku got hit pretty hard today. I think they're down almost 7% at one point. Tesla was down quite a bit, which once again, technically not, I guess, a tech stock, but still can be put in that sector. They've been getting hit very hard over the past couple of weeks. This is the first time Tesla's gone below 300 even in a little bit, and they're at 257 right now, which is really, really low. I might actually consider grabbing a share of them just for a little bit of a swing trade here. Square Inc. down, which I actually sold recently, just mostly because I was like very high up on them. A couple other ones that were down quite a bit. If I keep scrolling through, I'm actually on Yahoo Finance right now. I really like their day losers page. They have a lot of cool like screeners on there that are kind of helpful sometimes, and this is just one of their like default ones. Like I said, Roku down 5%. OLED, another kind of interesting company if you're interested in like tech kind of stuff, down 5% today. Shopify down 5%. Facebook and Twitter actually weren't down today, probably because they had a little bit of a pullback, but tech stocks getting hit very, very hard. Amazon, huge market cap on them, down 4%. Grubhub, another very big tech stock, down 4%. Like I said, Netflix was down as well. LendingTree down, LendingTree down, another kind of techie stock that was down quite a bit in this list. But a lot of tech stocks down quite a bit. And honestly, considering how the stock market's been performing, it's been going very well, and then over the past couple of months it's been going down, and a lot of those growers, the tech stocks, have been growing quite a bit. Like if you look at some of these stocks long-term returns, like if they're 1 year plus returns, a lot of them are over like 200%. Some of them are up to the 1,000% mark, even with like if you look at some stocks like Netflix and even stocks like Facebook are up to the 500-600% mark return. And obviously with stocks like that, they're going to be the first ones to go if the stock market starts to go, because like myself, if you take a look, stock like Square, I was up like 100% on them in like 6 months. And so I was okay with selling that stock, because even though, let's say, it dipped a little bit, I was still selling it quite high on the long term. So that's probably how a lot of other investors think when they're thinking about selling off certain stocks during stock market sell-offs like it's been happening over the past couple of weeks. It makes a whole lot more sense to sell stocks that you're up on a lot rather than stocks you're down on. So a lot of these tech stocks that have been having amazing growth are probably going to be the first ones to get sold off. But do I necessarily think this is long-term? Probably not. I think there's a couple things that might be possibly factoring into this. One, if you look at some of the biggest tech giants out there, obviously the FANG stocks, one of them, first letter, Facebook. Facebook's been going under a lot of fire recently. because of Russia ads meddling, and there's like a lot there. Even though Facebook did outwardly come out and apologize for it and say that they're going to try to fix it and everything, they still are undergoing a lot of heat, and they're also beginning to get investigating because of this. And I think this scares a lot of people in the tech sector, and specifically in the social media sector. If you've been following Twitter stock, they've also been following a little bit along with Facebook. Even though they haven't actually done anything, they have been falling in. They have actually had pretty good growth over the past year. And they actually had a really good earnings report last time too, so it is interesting to see that they are falling as well as Facebook. And I guess really the only other American comparison you can make to that is like Snapchat, but Snapchat's a little bit too new to like compare the price changes to them. It came out in like March of 2017, so it's like barely over a year old, still, you know, relatively new IPO, tech IPO, so it's kind of hard to compare them. But there are other like Chinese social media stocks out there that I don't necessarily like follow as well as I do the American ones, obviously, but a lot of the tech stocks have been getting hard. I think it is due to Facebook. I think a lot of people are worried if Facebook starts getting regulated, it's literally one of the biggest stocks out there, and definitely one of the biggest tech stocks out there. So people think if that stock or that company begins to get regulated by the government, can this happen to other companies as well? Now, just because Facebook's, you know, getting investigated, and, you know, they haven't necessarily gotten into like any sort of regulations yet per se, but a lot of people are kind of anticipating that. So I don't necessarily think that's a very smart way to invest based on like politics and like possible policy making. That probably isn't actually going to happen. That's not how I would invest. I still actually think Facebook is at a great buy-in point right now, and I think some of these tech stocks kind of needed this sell-off because a lot of them were overvalued. One stock that I still don't actually think is extremely overvalued, even though a lot of people do, is Netflix, and that is mainly because of a couple of factors. And I think the biggest one with Netflix, and why I wouldn't necessarily consider it overvalued, is because it just like, a lot of people are anticipating a lot of future growth with Netflix, but one big thing with Netflix is their future growth is like incredible and honestly almost like unrealistic and probably not sustainable at the same time. But also considering that they've been doing it for like 5-6 quarters now, it's not like it's just been like a 1 quarter thing. It's been a thing that's been going on for over a year now, and honestly getting on to like a few years now. Their user growth has been absolutely amazing, and that's what a majority of their sales come from and a majority of their profits come from. So even though this company's PE ratio is very, very high, the number of I guess you can call it subscribers or number of users that they're growing, that rate I think is like, or that number, especially that growth number, is probably the biggest number Netflix has right now going for them, and that's probably the most important to them as a company overall. In the future, in the next upcoming quarter, some numbers that are also going to start becoming important is how well their Netflix originals are doing. They're taking more shows off and replacing them with their own, which makes sense from a profit standpoint because they're obviously saving a whole lot of money on that. But I still don't necessarily think Netflix is extremely overvalued. Yes, they are slightly if you just look at the PE ratio, but if you look at the other numbers, then I would argue that they not necessarily. And one other thing about Netflix in my portfolio, I think my buy-in point for them was at like $150 right now, and they're still at like, they're almost at $300. So I'm up like 90% on them right now. So I'm not necessarily going to sell out anytime soon, but I'm definitely not going to sell out anytime soon, because they would have to go a lot lower to get anywhere near my buy-in point. I still hold a profit on them probably forever, but I definitely can't see selling out on any time. And it still is somewhat difficult to buy more shares of a stock when you're up, 100% on them. It would probably make more sense for me just, where I bought them in, to buy other stocks that I'm currently, down on or might be close to being down on, or that I just think are at decent buy-in points or better buy-in points than Netflix. It's kind of difficult to buy a stock like that, even though I do think they're going to continue to grow, especially when it's kind of that expensive. That'd be a pretty decent amount of my portfolio. My portfolio is only like $4,000 right now, so buying $200-$300 stocks kind of adds up into a relatively small portfolio. One other, I guess, stock to look at, ETF to look at, I should say, the FANG stock. I actually somewhat found out about this recently. Ticker symbol FNG. This stock tracks like new tech and media. Some of its biggest holdings are the FANG stocks, obviously, as the ticker symbol FNG. Some of its biggest ones: Facebook, Apple, Microsoft, Netflix, Amazon, Google. Pretty much just all the big ones. This one was down 2% today, 8% in the past week, 3 months down, 1 year almost even though it's only been out since July 12th, 2017. And another interesting ETF to take a look at that kind of like holds tech stocks is this one that someone actually told me about in the comments section, and it wasn't actually down today. It's been down a little bit over the past month or so, but because obviously the kind of recent sell-offs and especially the tech sector getting pretty hard, is BOTZ, ticker symbol BOTZ. It's a Global X Robotics and Artificial Intelligence ETF. I think that's actually a kind of interesting ETF. I didn't even think that was out there until someone showed it to me, but you can check out its holdings. You might not be as familiar with a lot of them, but it's a pretty cool stock to take a look at, and that's on a bit of a dip right, or excuse me, I keep saying stock. It's a pretty cool ETF to look at that's on a bit of a dip right now, especially if you can't afford some of these big tech stocks. But anyways, I don't think the tech sell-off is going to continue. I think it's going to end probably relatively soon, but hey, if you want to buy in on some of these tech stocks, they are at a discount. If it does continue, you could just simply buy more of them, and that's probably the best way to go with that. And I could see myself adding a couple more shares, but like I said before, I am up on quite a bit on most of my tech stocks, even though they have gone down a little bit over the past couple of days or so, and it might make more sense to put money elsewhere in my portfolio, just because those stocks, even though they're at somewhat a decent buying points right now, some other stocks might make more sense in my portfolio to focus on more. But anyways, guys, that's it for the video. If you enjoyed the video, leave a like and comment below how you've been doing, how your portfolio is doing. I know a lot of you guys have pretty tech heavy portfolios, but anyways, guys, I hope you enjoyed the video.